Shashank Sinha, who's the Managing Director of Stride Shasun, joins us to talk about their numbers too. So let's first go across to Stride Shasun. Mr. Sinha, thanks so much for taking the time out and being with us. What would you make of the quarter gone by, and would quarter 3 and quarter 4 show a better picture than what you've done in quarter 2, Mr. Sinha?
Thank you. So as we have commented, we are pleased overall that our business has rebounded quite strongly in quarter 2. This is mainly driven by very strong growth in regulated markets. We launched 2 successful new products in the US market, which we had talked about in the previous quarter. We also had good growth in the Australian business, where our distribution and our market share has increased. So overall, the quality of growth has been very good. We have rebounded quite strongly in the emerging markets as well. Good growth in Africa brands. Good recovery in India post GST. Overall, on the revenue side, we've had 20% quarter-on-quarter growth, which has been very good. The impact of the new products in this quarter was only for about a month, because we got approval only in September. So rather than talking about forward-looking numbers or indications, I'll broadly say that in the third quarter, obviously these new products will have their full impact through the entire quarter. And as our revenue momentum picks up further and the operating leverage kicks in, we do expect good results in the second half of the year.
Operationally, it will look much better than what it has. I mean, I'm not asking you for specific numbers on the PAT or revenue or anything, but I think revenues weren't a disappointment as much as the bottom line numbers were. Your revenues were much better than what we were working with. But I think the EBITDA numbers, the bottom line numbers and the margin numbers left a bit to be desired, Mr. Sinha.
That's the operating leverage that I'm talking about. So certainly we are looking at an improvement in the operating leverage in the coming quarters.
Mr. Sinha, how are the trends with regard to pricing, since the entire industry has been reeling under the pricing pressure that the pharma sector has been facing? How was the quarter for you in terms of pricing?
On pricing, we have quite a different story in terms of the US market. We are growing off a small base in the US market, and all of our growth is new sales, because as I said, it's essentially around new product launches. So we don't have a large legacy portfolio, which is and where the level of competition is really creating the steep pricing pressure in the rest of the market. Since ours is a new business, we haven't experienced the pricing pressure. Plus, remember that we have always indicated to the fact that we want to be in limited competition, high entry barrier categories. So many of the categories and many of the products that we have launched or that we are in, we are maybe the only Indian generic player. For example, in omega-3, we are the only Indian generic player. Or in one of our other big products, which is a vitamin product, algocalciferol, we are the only Indian player, right? Potassium citrate, which we have launched, we are only one. There is only one other Indian generic player. So, we are in limited competition categories, and that has defended us quite well in the US market. We have not seen anything out of line. The impact of the overall pricing on our portfolio has been, the same as before, which is kind of mid-single digit.
And how does your pipeline really look in US market?
The pipeline is strong. We have 27 or 28 ANDA applications pending for approval. Almost the entire pipeline has been filed under these new time-bound GDUFA guidelines, where approvals are given within 12 months. So all of that should materialize in the 12 months. Plus, we are continuing our filing momentum. So if you look at what we have indicated in the past, we'll be filing between 15 and 20 new product applications during this year, which again will be out of the approval pipe within 12 months from now. So the new product pace is only going to become stronger as our approval momentum and filing momentum picks up.
Okay. I think one question on key approvals that are expected the next couple of quarters, and also I think KKR has already confirmed that they are working with you on a deal involving Innova Pharma in Australia. What's the update thereof? So 2 updates that if you can share with us.
Look, as I mentioned earlier, I can't comment on the portfolio which is still under approval. So I won't be, specifically talking about any specific product. I did say to you that we have 28 ANDA applications pending. If you look at the composition of that, almost 50% or more than 50% of that portfolio is actually low competition. So there are modified releases, there are soft gel capsules, there are other topical products. So all of that is more than 14, 15 of these 27, 28 are actually very, very defensible, because we'll be one of the very few players in that market. More than that, I'm not allowed to comment. On Innova, I mean, that's old news, honestly. That transaction has, Innova has already been acquired by a consortium in Australia. And, so I won't comment on what happened in the past.
Okay, fair call. I think the key that we are driving from this interaction is that your numbers, your operating lev will come back in the second half, and that will help you improve the margins in a big way, maybe as soon as Q3 itself. Thanks a lot, Mr. Sinha, for joining in today and giving us that perspective. That's Stride Shasun.